Well, hello, and hello. Welcome to our Chapter 14 video lecture. Chapter 14 focuses on planning for profit and cost control. In Chapter 14, we're going to focus on planning. Of course, planning is crucial to operating a profitable business. Planning allows us to estimate the projected revenue and expenses for a specified amount of time. We prepare what's known as a budget. So a budget expresses our business plan in financial terms. The budgeting process involves coordinating the financial process of all areas of the business. So we're going to first talk about what we call a master budget and look at the components that make up what's known as a master budget. So again, the master budget results from combining numerous specific plans prepared by different departments. So again, let's get ready to take a look at how to prepare first what's known as a master budget. Okay, so let's take a look at the budgeting process and what are the benefits that comes from providing an actual budget. Well, the planning process normally addresses three different time horizons: our short-term planning, intermediate planning, and our long-range planning. When you think about your short-term planning, it focuses on our financial needs for the upcoming year. The intermediate range may cover from 3 to 5 years, and then your long range planning focuses on a time frame more than 5 years in the future. Okay? A strategic plan is more long term. It involves making long term decisions, such as defining the scope of the business, determine which products to develop or continue, and identify the most profitable market niche. So what we're saying here is that a company may develop several different types of products, but strategic planning says which of those products are the most profitable, which ones should we continue to make, and which products should we stop making. Capital budgeting focus on more your intermediate range planning and involves decisions such as whether to buy or lease equipment, whether to stimulate sales, or whether to increase the company's asset base. So now we're saying what type of long-term assets, such as equipment, machinery, land, building, will be needed in order to operate the actual business. We'll look at those aspects in our capital budget. And then the operation budget is more short term. When you think about operations, we're now focused on our daily type of business transaction. What are the needs in order to run the company? So we look at our operating expenses, we'll look at our operating revenue to prepare the operations budget. Okay, so a key component of the master budget, which describes short-term objective, will be your sales budget, your production goals, and your financial plan. So the master budget normally covers a 1 year time frame. It's divided into quarterly projections. So of course there are 4 quarters in a year. So often you're going to have a quarterly budget that will show data for each month, and then you total 3 months to show data for that specific quarter. So many companies use what we call a perpetual or continuous budgeting covering a 12-month reporting period. So again, you'll do a budget for each month of the quarter and then show your totals for each of those quarters. We'll then combine all 4 of those quarters to an annual budget for a 12-month reporting period. Okay? What are some of the advantages of preparing a budget? Well, a budget is planning. It formalizes and documents managerial plans by clearly communicating the objectives to both superiors and the employees. So a budget puts the visions of management into a documentation format. A budget allows for coordination. The budgeting process forces coordination among departments to promote decisions in the best interest of the company as a whole. So now we're going to have the marketing department working with the production department, working with the sales department when it comes to preparing the actual budget. More advanced would be the performance measurement. We get to compare actual results against our budget expectations. We'll look at our actual revenue compared to our budgeted revenue. We'll look at our actual expenses compared to our budget expenses. We'll then take corrective actions to provide advance notice of potential shortages, meaning that we're going to run out of supplies of material, bottlenecks, which are things that could hold up production, or other weaknesses, such as having a deficit in our cash account. So pretty much a budget allow us to identify potential problems earlier and then take corrective actions. Okay? Upper management must be sensitive to the impact of the budgeting process on employees. So what we're saying here is that although we have a budget and we know how much we budget to spend for salaries, supplies, rent, etc., we still must be sensitive to the impact that the budget has on the employees. So sometimes we understand that although we budgeted for a certain dollar amount, there may be factors that force us to go over that budgetary amount. Okay? So budgets can be constraining. They limit individual freedom in favor of an established plan. So I'm not saying that's a bad thing. So if we have a budget for our supplies cost, it means that often the employees cannot purchase supplies over that budget amount. So yes, that may restrict your freedom, but it's not a bad thing to have an established plan. So, but many people find evaluations based upon budgets expectations stressful. So what we're saying here is now, are the employees being evaluated based upon whether or not they stay within the budgetary limits? Now, that can be stressful, especially if the employees did not have impact into the development of the budget that was all done by upper management. So we feel that the most effective budget is those that is not just top down, meaning that it just came from upper management, but a budget where the employees had some impact into the development of the actual budget. So upper level management must demonstrate that budgets are sincere efforts to express realistic goals employees are expected to meet. So what we're saying here is that do not put together a budget that you know is not going to be realistic. Okay? So there are different types of budget. First, there is a participative budget, frequently through successful in creating a healthy atmosphere. So with this technique, it involves participation in the budget process by personnel at all levels of organization, not just management, upper level management. So we're saying here with this participative budget, we're saying employees and management on all different levels, whether we're looking at middle level management, upper management employees, we're now saying they're all having some impact on the decision making process. So with this format, information flows from the bottom up as well as from the top down during the budget presentation. So again, with a participative budget, it simply means that not everyone, but you have more people involved in the budgeting process. This fosters more cooperation, motivation, and less fear. So when you think about it, if you're being given a task and you're being held to some type of restriction, typically if you have some input, then you feel more comfortable that that task can be realistic. So we're now looking at what's called a master budget, which is a group of detailed budget schedules representing the company's operating and financial plans for a future accounting period and normally includes operating budgets, capital budgets, and pro forma financial statements. So we're going to take a look at the components that make up what's known as a master budget. We can begin with the operating budget. The operating budget focuses on detailed operating activities. When you think about your operating activity, think about your normal type of business transaction that must take place in order to operate your business organization. So if we look at a retail company, they will have a sales budget, an inventory purchase budget, a selling and administrative expense budget, and a cash budget. These are the main types of operating budgets you're going to have for a retail-based business organization. Okay? We're going to learn how to prepare all of those different types of operating budgets. So the operating budget are used to prepare what we call pro forma statements. These are financial statements based upon projections, not historical information. So with a pro forma financial statement, we are projecting our income and expenses, and they're not just based upon historical information, but based upon what we expect to bring in and what we expect to spend for the upcoming accounting period. Now, of course, there will be some impact by historical information because typically historical information is used to project what would take place in the future. So our company is called Hampton Hams. They're going to prepare a pro forma income statement, balance sheet, and a statement of cash flow. Typically, these pro forma statements are prepared based upon the information coming from our different budgets. So this illustration shows the components that make up what's known as a master budget. The components that make up what's known as a master budget. So we'll first prepare a sales budget, inventory budget, a selling and admin expense budget, and a cash budget. And once you prepare these budgets, we'll use this data to prepare our informal incomes, our pro forma incomes, our pro forma financial statements, such as our income statement, our balance sheet, and our statement of cash flows. Okay, so get ready. We're going to begin first by preparing our first budget, which would be our sales budget. But let's learn a little information about our company. So we have Hampton Hams, a major corporation that sells hams nationwide through retail outlets and shopping malls. They focus on a single product and standout operation. As a result, they have a high quality product at a competitive price. They've experienced phenomenal growth over the past 5 years. They finance new stuff by borrowing money on a line of credit from National Bank. The accounting department is preparing the new store's master budget for October, November, and December. So you ready? Okay. Stay tuned. We're going to now prepare next the master budget.